Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording a few minutes after the close on Friday, the 17th of October. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good. What a week, eh?
Yeah, well, as we talked about, we kept saying, hey, volatility season is here. It's going to be volatile. And to go along with that, we got a little added bonus. We're seeing trick or treating early from the market with
My
with
God.
all kinds of spooky activities this week.
Mhm. Everywhere.
Yeah, so and I promise everyone we're gonna Barry's gonna spend time and I'm gonna spend time and we're gonna point out a lot of these, trick or treating activities that we're seeing because it's probably going to be with us, through the end of the year because we don't see volatility letting up, and these whipsaws and games and false breaks and sort of things are going to be par for the course. So identifying them can create real opportunity. So without any further delay, let's jump in on the SPX here.
Well, last week, the big theme we left with was about a counter trend. And we talked about the one thing we're going to be looking for is counter trend, not so much where the lows might be coming in, but the counter trend. We had a number of them, let's just say, because we've had big range days. But either way, the Wednesday high came up exactly where we had marked it on the daily, right around 27.27. You can see we came up right up into it and reversed. And on at least on the cash, we have an inside bar. So next week's going to be important. You know how we handle this little pattern following the counter trend. Because following the counter trend, we make we went lower, so we took out the low of the high bar, and then we have an inside bar. So normally this is very bearish. You guys go back and check the pattern. But it can go either way, not, it doesn't have to be exactly the same. It's not a 100% pattern. But it's something to always keep in mind. And we'll look at the counter trends that we got during the week each day when we get to the 30-minute chart. And we'll also look at the weekly. There's a lot of things going on. And I think if you guys have been following us for a while, you know, we were way ahead of this. We're normally a little bit ahead because we look at the time cycles that are coming up and the prices that are nearby. And you'll see when we talk about gold, what we said last week, the targets we were talking about in the weekly, daily, the silver targets, everything was met. So I guess that's the benefit of using the squares. We have a reasonable expectation of where prices can go following certain patterns, probable outcomes. Anyway, let's get started. And we're going to go through the indices first and then start with bonds and cover the metals and go on to the currencies. And if you guys like our work, please hit like and share and hit the alerts. So for cash, I think the thing to do for next week is starting off with Monday, we want to watch the 66.38 level. For one thing, we've straddled this level all week. So, every day we've crossed it somehow, one way or the other, but just couldn't hold to one side or the other, right? And we've always managed to sort of mean revert, but not be able to settle. So watch 638, watch Friday's low, watch Friday's high, because that's really going to be important. Friday's high, fine. I think if we can hold above 638, 6630, give it a couple of points, and whatever pattern looks a little bullish, I think we're good to kind of go up and test these highs again. But if we slip below 6638, I think that's sort of a yellow flag. And if we take out Friday's low, then I think we can expect lower prices. A lot of weakness can come in all of a sudden. So you really have to watch that. And I dropped a little line here. I meant to put a price on it. It's 60. I'll put that in blue. So let's draw a line across 6601. And I think on balance, if you look at, I was looking at some of the cycles that were coming in. On balance, you can see we managed to hold above that most of the time. And, we talked about big support, the structural support down at the 6450 level. We had 3/4 level support right around 65.49. That's where the big drop stalled out. in the three quarters. You can see 1, 2, 3. Other than that day, you can see majority of the time we were able to hold above 66.38. So I think the idea with the 66.01 is you want to watch it to see if we get under that. Another reason is you can see Friday's low was very close to it. So if we lose that, we end up on the bottom side. And, last couple of times we visited, we were below that. We went all the way down to three quarters level. That was 65.50 roughly. So I don't think, if we visit this level again, I don't think we're going to stop at 65.50. But I think it's important to watch that level, watch to see if we break the 66.01. And more importantly, sort of the, green light, red light, yellow light, red light would be 66.38 would be sort of a yellow light, right? Yellow flag. You want to make sure that we stay, if you're bullish, we want to stay above it. If we start slipping below, we're going to start getting some weakness. And if we break through 66.01, I'm expecting a lot more weakness. So watch out for that. And obviously, if we take out 65.50, we have 64.60 level is the next stop, which, as you guys know now, we can do that in a couple of hours, if not an hour. So that's kind of how it sets up. So the downside could get ugly, and we have 2, 3 levels to watch as it progresses. Ideally, if we're all done with the business down below, all the testing down here at three-quarter level, we ought to hold above. Under the most bullish conditions, we ought to hold above 66.38 on any pullbacks and trade higher, right? And at least go up and test the 27.27 level and poke around here and see what happens. And we might just go up here and stall out. So we'll see, because we'll get into the whys and the hows a little bit later, but basically we could go up here and test this 27.30 level. But that's another story, right? But then it's bullish because we're above the 66.38. That's to the upside. If we get under it and we also get under 66.01, and I think that's the danger sign. And if we do that, we could open up, we take out the potential, the 65.50 level, we have about 100-point drop. But that's kind of how I see it, how to map it out for the week ahead. And yeah, I think that's enough. Ben, you want to add anything to that, or is that clear enough to?
I think it's nice and concise and it's clean. You got the levels to watch and watch what price does at those levels, and you'll have the understanding of what odds favor is going to come next.
Right. And the nice thing is Monday price action is going to be very close to these two numbers anyway. And after that, either we have to, we're going to chop sideways, or we're going to either, lift off away from this level, this 50% level, which we've crisscrossed all week, or we're going to, sort of sink from that level. One of the two has to happen. So anyway, that's how to play it. And now you guys know all the indications, what to watch for. I think we're good there. Let's jump to the front month. Well, if you guys didn't catch last week's show, catch it, because we talked about the timing and the cycles that came in and the importance of it, so forth and so on. And the week before that, so coming up into the high, we talked about it. So all the talk related, technicals related to that is in the last 2 or 3 episodes. You guys can check that. So I'm not going to spend time on the high. I'll just work on what to do from here. Okay, so looking at the December, we're back to the 67.35 level. And, if we can maintain below that, I think the conditions are going to be soft. If we can manage to get above it, which is pretty, that's really getting back very close to the highs. But if we can get up into there, then I think we have a higher chance of moving high, making new highs. So 67.35 is sort of the canary. We want to watch that line and to see if we can sort of settle above or not. So you can see this week, we weren't able to do that, other than just poke a little bit up there on Wednesday. Most of the week was below that. And far as these are daily charts, so far as the daily prices go, that's a level to watch. And we'll have other levels on the lower time frames. So we'll look at those when we get to the 30. This is the continuation chart coming from the April lows. We had the 67.60 as a key level, 240 degrees up. And we did that 180 bars right into the smack into the middle of it. Yeah, we talked about how we went a little further. This was a big fake out, right? Being able to hold above it and not. And we talked about the eighth rule and why we didn't get caught up in that. Anyway, aftermath, you can see the counter trend that we talked about last week. We came up and tapped it right there. It was right at the high. We traded lower. So obviously for next week, as long as we're below 67.60, I think the conditions are softer. Unless we can go down to, we can get down into this 65.20 level, 65.17, and poke around and maybe do a false break and run up there, spend some time. That's the other choice, right? Upside is very clear. Either we get above 67.60 or not. Downside, we could do a few things. We do have a pretty good trend line. It's holding. So if we come back down to visit the 50%, 65, 20, 17, 20 area, obviously we're going to break this. And if we break the trend line, I don't know if 17 is going to be holding it. You know what I mean? So we'll go a little bit lower. And we talked about 64.50. So that's a 64.50 area is a good solid support area. It's in the middle of this entire congestion. So getting into about halfway through it, that's good. It ought to find support there. If it doesn't, then we have other things to deal with. But that's kind of what I'm looking at to the downside, and the logic is really wrapped around those levels. This is the chart I wanted to go to. It's a continuation chart, but we're going off of the October low, October 22 low. And 67.66 was a key level here. And I guess the idea here is we want to make sure that we're below this if we're expecting market to be weak. And that is 67.53. Let me adjust that number. So long as we're below that, and you can see even if you drop a line, you can see how their initial highs before the actual cycle high came in here. This was sort of the false move. And, and in between here is when we got the 180 degrees. I think it was 79.5, 78.5, somebody said. So it's all right in here. And then we got the break, counter trend held below 63.53. That's what I was really looking for. And so far we're under it. So until we take this out, markets are weak. Okay, I think that's what I'm trying to sort of hammer home. And if we were to just sort of take out Friday's low, and now we're talking about the futures market, right? So we're, real big support. I mean, the solid support is 63.93. That's 360 degrees up from the October 22 lows. So 63.96, 6400. That's kind of where that is. We talked about 64.50, so that's okay. But either way, they're all down below. And obviously volatility is going to increase, and it's all going to look a little crazy if we get down to that level, but that's sort of where we're looking at. There's really nothing above that. We start slipping from here. Let's take a quick look at the Dow. Dow, we came right up into 288 degrees up, 27,162. Make sure the number is correct. 47,160, close enough. And we reversed, and this week, ever since the high, we managed to sort of stay below the level. The Wednesday was the counter trend high, and that came into place, and we sold off. I guess the thing to watch now is to see if the counter trend high gets taken out or not. If it doesn't, we are looking to see if we get sell setups. We ought to be selling them. And I'll show you why in the 30-minute in a little bit. So that's the level. If you guys want the 3/4 level, 45.9088. So 4,600 is basically the level here you want to watch. Obviously, if we can be above it, we could be consolidating for a little bit longer. It's possible we consolidate here. It doesn't have to be, back to a big bull or some kind of a big bear. We could consolidate here, and the bracket would be between this 47,162 number and down here 4600. So watch that bracket. It's something that could develop over time. Let me put that down here. Okay, that's it for the Dow. Let's take a look at the Nasdaq. Nasdaq, you can see it. All the markets we're watching, you can see the same pattern, right? The high came in, and the counter trend definitely got stuck under the key level, and you can see this was sort of the false move that went above the line. And here is 140 is a level at the 135 degrees. So, unless we can settle above this squarely, any kind of poking like we did on Thursday, NASDAQ, they don't really count. Obviously, the counter trend high counts. You want to watch that closely, but really we need to settle above this, getting business done on the upside. On the downside, 23,700 is the 50% level. And I have a little bracket here between 23,700 and 23,800 roughly. So this is a good support level if we were to take out the lows and come down. So we'll see what happens. So we have the upside. It's very clear line. So we don't have a whole lot to discuss in that sense, because it's very easy to see where the cutoff is, right? We're below that. Expect weaker conditions. If we're above it, we can expect. So next week is going to be decisive in that sense, right? Hard to tell what kind of crazy will show up, but it's easy to work with just one level across all the markets. We'll see what happens. Normally I jump to the weekly after everyone, but what I'll do is I'll cover the weeklies and then we'll look at the 30-minute, they'll look at the weekly just to keep it all together.
30 minute
So
was really good this week.
yeah, 30-minute was kick ass this week.
Mm-hmm.
And I hope you guys are following us on X, because these get posted every morning. And Ben's posting S&P and all the commodities. He's following coffee and everything else all during the day. So, and the links are in the description. So we started out with the 13th. We were looking for resistance at 67.17 specifically, and you guys can check the post on X to confirm all of this. I didn't just add these, for the show. So these are working charts. These are the charts that I post. It's all there. All right. So on the 13th, we got the high reversed, and we sold off, right? That was the idea. We were looking to sell off. On the 14th, we came back. It was 13th, 14th, we came back, made a little false break, broke the triangle to the downside, found support around above 66.52. So that was around 660, got above 66.80 over here. Now, once we did that, we were looking for it to go up and test these highs, and it did that. And then some more, right? Going into the 15th, we were looking for resistance, really drop dead resistance was 67.52. And we pushed higher, didn't quite get to 67.70. And then we reversed. Of course, we have an inside bar right there, and we took out the low. And that was really it if you were trading this. The fact that it took out 67.52 by that much, didn't quite get there. I think if you were watching this real time, if the inside bar was the key, we wanted to have an inside bar. If we were going to go higher, we ought to take the high out and move higher. But I think this was kind of a false move. It was really a crazy push. And sometimes you get that. You pass your levels. And past your levels are okay. We didn't make any air above it. There's no bar above it. It was just a poke and then back down. No bodies are up there, right? The entire body of the bar. Anyway, we reversed, came right back down to 66.52, which is right here. Good support. Bounced back to 67.17. The idea here was to see which way we're going to swing. We have to either settle above it or settle under it. So and then move in the new direction. So here, we did this sort of a consolidation right under a level, and we've seen this in gold and some other markets. When we do these triangles, they can break to the upside. We broke to the upside, and again went up to test 67.52, which is the area we were looking for resistance. Support was 67.17. And I think I mentioned this 67.28. If we can't maintain above that, it's a kind of a yellow flag, and taking out 17 would be a red flag. And of course, 52 is resistance. So all of that happened. And then we just dropped. And from there, it was, going into the overnight, dropped all the way down to a full 144 degrees, which is 65.70. And that's where we stalled out before whipping back around and running right back up to 67.17. So this morning we talked about, we can hold about the 64.44 level in this bracket, this zone, 64.42, 64.52. Then we can go up and test higher, which the market did nicely, versus getting below that, right? If you flip this around, we're gonna stuck here and then sell off. So the idea was seeing that this area was going to be a pivot today, and to trade in that direction. Wasn't easy, intraday bars were huge, but it settled down, after a little while, and everything broke to the upside. At least that was the direction we were looking for, coming off of support. So that worked out. And, we closed with 67.17 poking right there, and then we sold off again. So like we always do on Friday, looking for next week, obviously we want to look at 67.17, and here 66.98. Just call it 6,700. This is the bracket we want to watch. If we can settle above 67.17, we can go up and test again, and maybe establish some kind of a consolidation area above that 17. That would make it a little bit more stable, but I think below 17 for the next few days, it's unstable, and we could probably see it, same kind of price action, right? We try to move higher, and then we get sold off. And if you look at the line, we're making lower highs, and we're making lower lows. So the question is, did we finish here or not? The easiest way to know is watch the Friday's price action. Well, futures, we have a huge range, but watch the cash. If we take out the low of the high on Monday, Tuesday, and I think that'll set up the rest of it. If you guys have the levels, I think the rest is fairly easy. Okay, let's look at the weekly. Here's a weekly cash. 64.43 is the key level of support. If we slip and slide, we talked about 64.50 being support. So, this is kind of the area we're going to find support. So 64.43 would be the big level to watch in case we get some kind of a Halloween surprise. If we're going to go higher, obviously we have room. We're in the upper square. We have room to run, but we're stuck under the quarter level with a whole bunch of drama happening. So it wouldn't be bad. I think correcting down to 64.43 or even lower would be super healthy. If you look at it structurally, coming down to 6,000 is actually good. We have really good structural support there. And yeah, I think that's what I have. We have an inside bar this week. So obviously taking out the low going to be something really important we have to watch for next week. All right, let's move on to the futures chart. Here we talked about this last week. We talked about the 65.20. This is a key support level that we tapped the week before. We have an inside bar this week. Again, just like the cash, it's going to be really important to see if we take this out, because if we take this out, we take out, the prior week, then, we enter the 6,400 trial, right? So this area, this zone here, and we get into here, look, we're looking at a much longer ordeal than a couple of weeks down and then back up. So it could get a little bit of extended. But let's see what happens. Markets are not always that easy. Normally, we might try to fake to the upside, do a false break, and then roll over and then go lower. That's what the market's been doing. And if it does it If it does it for much longer, this could end up becoming some kind of a producing some kind of a distribution pattern, which would say we have lower prices to come. But if that kind of a longer term pattern shows up, kind of like what we had here, this is sort of a distribution pattern. Definitely
Yeah, that's
showed
what I
up
was going
on.
to say. Earlier this
Uh-huh.
year, we had something like that.
Yeah, and on the daily was very clear,
Yep.
and we could be setting up for that. So that's the other possibility. But I think the nice thing is all the levels we need are very clear and they're clean. So 65.20 on the weekly um, futures chart, continuation chart. I think that's something to watch. Yep, that's it for the indices. I mean, it took a while. My apologies. About as fast as I can go.
Now
Um,
that's it's good stuff because the key is to focus on the price and the pattern, right? Price and pattern, price and pattern.
yes, price and pattern, and we have the pattern and we have price levels. So let's see. And if you guys have been watching for the last couple of 3 weeks steadily, you'll know it really doesn't matter what's on the news and who's tweeting what. When the time is set up and the levels are there, how price behaves is entirely on the chart. It's all recorded on the chart. So I think that's the that's a good part. That's the good news. The fact that we get caught up in the news is the bad news, right? The
That's correct.
mental
Yeah.
side where we get spooked and all the other things that show up with the fear. So, all right, let's move on to bonds. What did bonds do? We talked last week. We talked about if we can get off the 45-degree line, and we're probably going to go up and test 119.16. That's the next level of resistance. And we did that. We tapped it and reversed. And what to expect? Not much. I think if we take out today's low, we can expect bonds to go lower a little bit, test a little bit lower, maybe 17, and maybe even all the way down to 16 and a half to retest it, which means we're building a higher level consolidation, which is above all of this, and that is kind of bullish. But is it possible that all of this was some kind of a well, it was a move higher, but is that a basis for some kind of a big bull market, right? Um, we'll have to see. But I think holding above 16 and a half is positive. In the meantime, 119.16, 119 and a half is resistance. So we'll have to work through this. So far, we've been kind of consolidating, not a whole lot of movement in terms of the daily chart, but it's enough to scalp it, I guess. The indices kept us busy, so I haven't looked
Yeah.
at the.
I mean, the
Go ahead.
words that come to mind are grinding, right? It's grinding.
Yeah, it's definitely grinding. And if you look at the weekly, we talked about the bigger resistance is this line around 119 and a half. So that's the level. I would say that's kind of like what I would call a breakout level. If they're going to go higher, I mean higher meaning look, the highs in 2024 stalled out around 128.07 was the level. We stalled out around 127 and a half or so. So guys, I'm also eyeballing some numbers because it takes time to put the cursor and get the exacts, but you guys get the idea, right? You can put the cursor there and get the right number. All right. So as far as the weekly goes, we could push a little higher. Like I said, we can correct a little bit on the daily and go back up, test the 16 out, and continue to push against this. To the downside, we have a lot of room as far as the lower square goes. I mean, this is the lower square. We made the big. I mean, this is in 22 October low was a big one. So we are on the we are below that level now. So that's why that becomes a key level to see. We've been below most of the year, so it would be a big deal to get on top. Otherwise, I'm really not all that excited about the long side. That's what I meant to say on the daily. It's because of the weekly chart. So once we can turn around here, get a weekly reversal, okay, fine. Then now we're back to the downside. But let's see. It's also a lot of chop. Let's move on to gold.
Barry, I think there's something wrong with your chart. I see a red bar on gold.
Yeah, well, Christmas. That's what it is.
What a move. What a
What a move.
move.
What a move. What a move. What a week. Right?
Yeah. Yep.
So anyway, we don't want to get too caught up in this. I want to mention that we're coming up under 45 bars for the move, and this could possibly be a blow off, but it could go for 45, 49. So the high is around, well, not the high. The 45 comes in around the 22nd.
22nd. Hmm.
So 22nd, third, fourth, fifth, sixth, going into that, that's sort of the death zone. And this is about a march right into that, you know. So watch out for it. We have price and time here. We're off by 1 bar. Good enough. Okay. 43.30 was resistance, and we got there. So this is sort of I would say yellow flag at the moment for gold. We'll I wanted to get a little bit more work done on gold for this week, but I didn't have the markets kept me busy.
I
Didn't
mean,
have
Barry,
much.
it could correct to 3,400 and still be super bullish.
Exactly.
That's the scary part,
Yeah,
right?
yeah, yep. Absolutely. And the nice thing is we'll be able to measure again, when the high, I mean, it doesn't mean we have to stop at a 45, 49, whatnot. We can obviously clearly go, blow right up into a 90 and get it all done. But it's important to watch it. When these levels come up, you want to watch it because that's just how it works. 43.30. So obviously want to be able to settle above that in order to go up and at the 4,500 level, which is around 45.12, 45.14. I mean, it would have been nice if we went there. I think we really tried, and we still might, but that's because we have a few days left. That would be, I mean, that would be ideal, right? Especially for somebody working with GAN, that would be a perfect number to uh, put in a high, any kind of a high. All right, so pullback wise, I think holding above 41.50 is going to be very, very bullish. I mean, that would be like the ideal place to hold. Next level down is obviously this 39.69, 39.70. Somewhere in between that would be the place. Or, we could be halfway through there. That could be like 40.50, 40.60 is a good number. But basically, I think all I have to say this week, all through here, we've been talking about how bullish it is, and you can see we've been really moving through these levels. Now we want to watch the other side because we're getting close to we have timing coming up. And so watch the 41.50. If we slip through there, watch the levels below that. We talked about 40.60, talked about 39.69, and that's really it. I mean, no matter how you draw the trend lines here, we are going into some kind of a grand finish, which is great. That's what trading's about. Gold's been really, really good. I didn't trade it as much as I should have, just because of the indices, everything else. But I know, Ben, you've been all over it, so it's been very good. So now we're gonna watch a little bit, take the throttle back a little bit, and watch what happens. Price action around 43.30 and also 41.50. We want to watch this to see what kind of pattern emerges. And if it's a bullish one, we're going to triangulate and run for a 90, another 45. It's possible, right? But we just want to respect the time that's coming up. This 45 to 90 is really critical. And this looks like a textbook case for that 49 death zone. So I think it's worth watching. That's for sure.
Absolutely.
Yeah. I'm going to run through the metals daily and then we'll look at the weeklies because it'll save some time. Here's the
Nailed
here's
the
the silver.
target, boy. Nailed it.
Nailed it. Nailed it. That's what it's about, right? So 53.60. Well, we talked about it. I said, above 49.10, we're gonna next target is 53.60, and we nailed it. So 49.10 is the level you want to watch, or 4,900. Let's say $49 is the way you want to watch. And if we can do that, very bullish. 46.50, okay, not as bullish, but it's still very bullish compared to the run we had and the structural support, which really, begins around 40, right? So imagine we used to think about $40 silver being, oh wow, right? Now $40 silver is structural support. So and 33 and a half is super, that's really where the sort of the floor is.
Amazing.
Yeah, amazing, just amazing. And it's great, great. It's funny. I was just thinking the other day how, we've been talking about silver, all through the 20s, starting in 2019 or 18, I think. Um, at least when we started recording, or gold anyway. Silver we started after people were asking for silver, but anyway, around the metals basically being bullish, and it's interesting when it's interesting to watch how the sentiment just changes over time, right? Over the last couple of years, you know,
Nobody cared
how
about it a few years ago.
not even a little bit, and then all of a sudden, we're up at $50 and we have headlines and every other post is about silver or the metals and
Well, and
how
I saw a picture online of lines in Australia to buy gold and silver.
I saw that. Yeah,
People
yeah.
lined up to buy it. Crazy.
Mm-hmm. At the right around the high.
And
Did they
yeah,
have
and
bags? Did they have bags with them?
I didn't see them, no. But you know what's interesting, Barry? I was doing some work on the silver on May. If you take it from the May 1 low, we did 60 by 60.
Ah, okay.
And that was
This low
there.
here. Okay.
Yep. And then on the weekly, we did 135 by 135 from the March of 23 low.
Yes, I think we
And
have that.
and then the monthly, we did a 72 by 36 from the October 22 low.
Well,
So
that's good work.
a lot of squares fired off on that one.
Which also would show up on the gold, with
Hmm.
both metals. So that's
Hmm.
great. That's great. Good stuff. And we'll look at the weeklies in a second, but here's the copper chart. Copper doing pretty well, So the key level here was
Your 495 there is a killer level.
495 is really good, and I think that's the level we're going to watch. That's going to be the bull bear line, so to speak. If we can sort of manage above that, we can consolidate here because right up in the 518, 519 level, we have resistance. It's a quarter square. It would be healthy for copper to consolidate here, but if we slip through, the next level down would be around 470, and the 470 is really good support for this part of the cycle. So if we get down in here, we could consolidate here and try back higher. Otherwise, looking for it to consolidate above 495 and retest these highs. And if we break through, I mean, ideally on this run, which it would have been nice if we got up to at least 540, but I think with all this China stuff, didn't quite make it. But nonetheless, coming off this low that we called out, we've done pretty well. And now looks like if the other metals are going to take a rest, copper might be hanging around this 495. The question is it above or below? And you guys have a bracket for both sides. So it'll be easier. Let's look at the weekly metals. All right, here
Price and
is
time too.
price and time. Absolutely. So I talked about this last week because it's a weekly chart with a weekly square. And I thought, on a weekly chart, three squares out, an important deal. And we talked about this last week, actually, right? About um, having a little heads up, making sure that you guys knew about the weekly cycle that's coming up. So that's at 156. So that's next week, and obviously we can give it a plus or minus 1 bar, which is fine. And if we could have blown all the way up into 364, that would have been, I mean, this is why I meant if we get to 45, it would have been beautiful. And we still might, we still, the move is not, might not be all done. But as we approach it, we have to be ready. Anyway, that would be ideal. We're looking at like 40, 45, 50. Yeah, that would be textbook. That would be great. In the meantime, we have what do you have? 312, 338, 340, 338 is where the line should be. I mean 338 degrees by 156. So that's where the square is. But three cycles out, for this kind of a move is something to watch. Okay, that's a big deal. And we've been watching. If you guys see what all the stuff we were doing back in, I told you we've been, very, very bullish all through here when these were becoming new highs, right? We were waiting for a breakout. We were talking about a breakout, and it all happened. We caught this low back in 22, and then we had the run up and had the ABCD down, and that was the second one, and the third one was this triangle breaking to the upside. After that was triangles all the way, right? Triangle, 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 all the way up. And now, so none of these actually made us pause. And we did call these out when we had the weekly numbers hit as we were moving higher. So we had 104 here, the 2-year cycle, and we had a little bit of a correction. We had 2.5 years, a little bit of a correction. And now we're coming up on 3 years. So I think it's, we have to watch it just like all the other cycles. Is at 43.41. All right, 43.41. Let me add that to it. Story is basically the same, so we'll keep it the same. 39.20 would be the full square. 41.31 right there, and 39.21 would be full square down from the 43.41. So it looks good. We have timing. I think if you're trading this, this is a hell of a good place to cover up here, and wait for the reset because now that this is done, you wait for the consolidation before you reset and take on the rest. So that's what I have. You want to add anything to this,
I
Ben?
think that's great coverage.
Yeah, it's
Yep.
simple, right? It's very simple, nothing
Hmm.
complicated. And here's the silver, basically hitting a very key level, coming off the 22 low. We had 135 degrees, 51.20, 51 and a quarter, or 51 and a quarter, I said last week. 51, let's say 25. And if you put the quarter square for the next square, it's right around 54. So you can see the high was right there. Timing cycles that Ben talked about, they're all in place. We don't have time to move the square around, but what he mentioned is true. So the timing is in. We have price. So, now you know. Copper, let's take a look at copper. 480 is the key level. Long as we're above that, I think it's positive for copper. We have an inside bar, so let's see what happens with the news or whatnot. If the lower the bar gets taken out, we might be back to check the trend line. Otherwise, it could consolidate here and move higher. So copper has been pushing higher. If you can look at the full chart, you can see, coming off the 2020 low. I mean, basically we made highs this year. So obviously, when we're saying copper's in a bull market, well, all the metals are. We were looking for a bull market back in 2019, 2020, and now we tapped new highs, almost $6 this year. So the question is that a finish? Are we done there and are we going into some kind of bear market? No, I don't think so, because if you look at the monthly, the bigger cycles, I think there's a lot more to go before we turn bearish. Anyway, that's my take on copper. All right, let's move on to Bitcoin. Bitcoin is really interesting.
Crack.
Crack is right. So last week, I mean, it's been beautiful, man. I didn't cover look at Bitcoin for a long time because it just wasn't liquidity wasn't there, so forth and so on. But now it's looking perfectly. So where did we leave it last? Well, I don't know if you guys know, if you guys go back and check the other episodes, we call these highs. We call for a big high up here and a correction. And we got the first correction. We got one, we got the two, look for a bounce. I mean, all these swings, I think we've called out online, if not here, definitely on X.
And Barry, on live on X, you defended your high call when it
That's
was up
right.
there. When it was up there ready to
Right.
break out, you're like, the high's in. Believe me,
Yep.
the high's in.
Hmm. Now, if I could have only shorted,
Right,
these big
right,
contracts these guys are doing, it would have
right.
been great. Well, next time. So anyway, so Bitcoin high here. And well, so we got the drop. So last week we had left off with this critical level. I talked about this 11,170, let's say 11,000, right? 11,000, 12,000 right here. And I had this zone and I said, look, this area, it's really critical because if we can hold it, we can bounce a little higher, retest, whatnot. But if we lose this, after the if we lose this after the counter trend, then we only have a couple of places to stop. And I said there's 109 area. The next level is along 103, there's 250. And sure enough, we were just, slowly starting to make lower lows. And then today, obviously, we just gave it all up and came right down to the level that we talked about. And I told you guys I will catch it. So there it is. And the fact is, we did have a decent move down, and that could end up becoming some kind of a flush. And the idea last week, remember, I was struggling to see if we made a new low between this low and that low. So the idea is, I was looking for that to be taken out as a flush. If you guys really look at the eyes, you can see where my solid line goes to 105, 217. And you can see the body today's open, right there. And you can see the tail end dipping down into the 103 zone, and then we reversed, right? So that's what I was talking about. So we came down to support. Now we might, I think we have done enough in price. And I think what's up next is a test of these highs. We're going to run back up and test this 111, 112 level. Of course, I have to say, as long as the 103, 250 level is holding, right? I would expect it to run up a little bit and test the highs. And that seems to be how Bitcoin runs. It rarely drops a lot. It's like a controlled demolition, right? So anyway, I'm looking for a little bit of a bounce to retest these, because now we have quite a bit of overhead. Remember, we got below all of these levels. We had these old highs, the 109 level, then we had these highs, then we got on top of it, we have these lows, and now as we're speaking, we're below the lows we made in August, right? So we have overhead. Can't say we don't. So you know, so let me draw a little trend line. So let's see what we do. I'm expecting it to at least go up and test up in there for now. And yeah, yep. I think that's enough. That's all I have I think you're going to cover Bitcoin anyway. You got the weekly charts and everything, right?
So, yeah, we'll look at weekly, monthly.
Great. All right, let's go on to the dollar. The dollar, I talked about a couple of key levels on, we talked about bonds. 1 second. The key level that we were straddling, and here, I think we have a similar thing happening. We have 99.50, and you can see, basically once we got under, we've been below that this entire time, last few months, right? And with support coming in at the half square. And so, buying it down here has been really good, and selling it up along here has been just as great, because we're stuck in this range till we break out. So I would say that if you guys want a good sign of the dollar really moving higher, we really want to settle above this 99.50. I think that's the key. Once we settle above that, I think even the full square 101.70, I think, is it? I'm sorry, 101.10. If we can getting above that wouldn't be a big problem. I think the big number to watch now is 99.50. To the downside, can we correct a little lower? Sure, we could, but we have a fairly solid trend line here. 97 is way below. So I think the lows look fairly good. Now the key is, if we can hold, you can probably do a 50% retracement here and see where the 50% comes in. And long as we hold above that, I think we're in pretty good shape. And once we can take 99.50 out and even settle above here, I think that'll open up the upside. Not to say that 101 is not going to be resistance, but I think the overall unfoldment will eventually be to the upside, and the downside might be exhausted. So that's it for the dollar. We'll cover the weeklies together for both currencies. Here's here's the euro. We didn't quite get to the equal move, and we had a little bit of a bounce. We got above the 1650, and today, we went up and hit the old trend line and reversed. Let's see what happens. So obviously, if we take out the low, Friday's low, then 1650 will also be taken out. Then now we're back. The trend is back down. What do we have so far? We have a high and we have a bunch of lower highs. We have a bunch of lower lows. So I think the trend is on, and we didn't stop at any kind of a big resistance that I know of. So I think the trend is down, and the high is in place as much as the dollar low is in place. Speaking of the dollar low, here's the weekly chart. So, we managed to hold above 97.83. This is on the weekly, right? So 98 and a quarter, 98.50 was the close. Not bad. I think if we can just kind of sort of above this zone here, we can sort of maintain above it in the coming weeks, coming bars. I think overall it's positive. We could dip down in. I mean, sometimes the bottom's a little bit dirty. Um, I'm guessing that's what it is. So if that's the case, we'll have to put up with that. But for now, the after the false break, we were up, and this looks like, we were up 3 weeks strong. So it's normal to have a little bit of a correction. So it's possible that we pull back, have a little correction. But overall, the lows are in place and they look fine to me. Euro is still straddling the 1654 level, the 1648, 1650. That's the level we're watching here. So it's still straddling. Until we can really settle on one side or the other, there's really not much we can get out of this chart. Again, we have a high in place, and we were down for 3 weeks, so it's okay to have a little bit of a correction back into the fold. So 1654 is the level to watch. We have the Hang Seng. We talked about if we take out 26,230, we're going to go lower. I talked about the next quarter level, so that's at 25,025, and that's support. If we take that out, then we're down to 2486 level. To the upside, 26,230 is now resistance. I don't know what to say here, Ben. Natural gases, we're eagerly waiting, but not much happening. It's at
No.
298 to $3 has pretty much been the place, right?
Yeah, when we failed at that half square last week, I said, we got to watch out, and there we are back to the lows testing.
Right, right. But these are great markets to just sit and write options, So
Yeah.
as long as you don't get chased too much. So,
Right.
because they're here big markets, eh? So anyway, so we'll see. We'll see what happens. For now, we're still, messing around this 298 level. Not much we can do there. And that's it. That's full round. That's all I got. If you guys like our work, again, please like, subscribe, and hit the alerts. And from what I'm hearing, hitting the likes is really the big deal for the algo. So if you guys really like our work and you watch this stuff, we appreciate your hitting that. All right, let's go on to the rest of the commodities and the long-term charts. What do you think?
I mean, it just shows you here, right? It's a wide band, but this is the key level here,
Yeah, I think
right?
it's funny. I mean, I'm laughing because it's one of those moments where you're just hanging like, okay, what's what's the next step, right? Because we have a counter trend high. We took out the low of the high bar. All right, let's start the show.
Yeah, exactly. That's exactly right. And when we were talking before the show, a similar pattern in the S&P. We made a high, we've got to pull back. Now we've been consolidating for a week, and which way is it going to go? Here we
Hmm.
we we know we have the markers, right? 24,263 on the downside, and we can extend it a little bit because of this structural support here and this 3/8 line.
Right,
This 23.9 to 24.2 area is going to be what decides which way we go. If we slice through that, we're going to 22.8 pretty quickly, probably.
right.
If we dip into here and hold, then we're probably heading back up. So this is the band to watch. You got the half square, and then you got this structural support area, with the next eighth. We did get the 49 Gann death zone low to high, right on time, came in. So we just got to watch next week and see what happens on that, which side gets taken out first here. It's funny how we're getting these triangles forming, right? I mean, we could chop around again for a few more days before this thing even goes. But we'll see. We'll see. Let's take a quick look at the calendar chart because this is the one that shows why that 25,000 area is
Hmm.
so important.
Exactly.
We talked about it last week. There was your big down bar on Friday, and then we spent the whole week, poking, 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 but not being able to clear either way. We couldn't clear either way. So next week we'll see. Do we get full bars above or full bars below where we can say, okay, the upside looks more probable or the downside looks more probable.
And the big lesson this week was learning to take profits quickly.
Whew, brutal, brutal whipsaws
Yeah, yeah,
and false breaks everywhere.
yeah.
All right, let's take a look at the weekly. Weekly 24,000 is key. We're comfortably above it. We haven't, had any bars below it all week. So, all of the last few weeks, I should say, these are weekly. So the last 3 or 4 weeks, we've been above it. We're just not making any progress. We tapped that quarter square, and then we've been sort of bouncing back and forth around across the eighth square. So let's see what gives way first. Again, that's why on the daily, let's switch back to the daily so you can see why how it correlates in with the weekly. So we're 23,966 there, 24,2, and then this 23,9 area. So this is really, really key. Not only daily but weekly basis as well. Let's take a last look at the monthly. There's your monthly. And here the key number again is 24. So we have that
Hmm.
cluster berry of 24 to 25,000 where this the direction's going to be decided in there.
Right.
If we test it successfully, we're gonna go higher to 26, 27,000. If we get stuck under, we're heading down to 21, 22.
Yep.
And that's basically, what we have in the Nasdaq. All right, let's jump over to Bitcoin. Key level we talked about last week, 108.
Hmm.
And we are below it now, and we pushed through it and made a lower low. So it's really going to come down to do we get bars starting to get stuck under here, or do we get bars like this that stay above, bars that stay above? Then we can head back up and test 119. But right now there's pressure. There's pressure on it. I was looking at the count. We did 106, which is close to a 108 low to high
Yep. Yep. That's
right
there.
there. Yep.
And
And
also, if this is a expanding triangle, now that we tapped the line, we ought to bounce and at least check the mid level, right?
yeah, at
Before.
least right up in
Yeah.
here somewhere.
Mm-hmm.
115,
Okay.
116, 117, that area. Let's take a look at the weekly. Weekly's on a
Look at that.
critical spot too.
Hmm.
Dancing with the half square. Um,
Weekly doesn't
again,
look that good.
no, no, no. This 108 is key. I mean, the high came in perfectly, right? Right on the full square, 216 up. And now we come down and we're testing here. If we get stuck under, it opens up 89,000. So that this straddling this will keep the suspense going, and then we have to see which way we clear first.
Right.
Let's take a quick look at the monthly, which the bar turned super ugly. Just 2 weeks ago, we were all up here, it was a big green candle, and now look where we are. We're below the full square,
Hmm.
and we've got a red candle. Here, 112 key. Weekly, you saw 108. Daily, you saw around 107, 108. So it's right in that 107 to 112 area. We got to really watch these closes and see how it goes. But if it's below those levels, there's going to be pressure. There's going to be pressure on Bitcoin. And maybe it's rolling over with, with gold and with silver because all of them have had a great run this year, and maybe they're all rolling over together. We'll see. All right, let's go look at the commodities. Only have two to talk about today, and it's going to be pretty quick, but let's go to corn first. Why have I put corn up? We were going down and we thought we were doing this ABCD, and then we did a little false break here. See that false break?
Yep.
Reversed pretty hard off of it the last 3 days. Now we haven't taken out this high yet. That's the thing we want to watch early this week. Can we get some follow through, take out that high, and then go up and challenge the half squared here at 446? That taking out these highs, which let's see where those are, around 431 would be really bullish because then that would give us, a high, a higher low, and a higher high. And then we can go up here and challenge the half square. Then we want to see if we can sit on top of it.
Right.
I'll also show you the weekly really quickly. The monthly's not much to see.
That was a
Monthly's,
beautiful false break, by the way.
it was nice, wasn't it?
Hmm.
And here, the reason I wanted to show you this is we're holding this full square level, the 104, 104 degrees up. We're holding that, with the last 3 weeks bars closing on the high. So it may be building the energy to push. And the push on the daily would be what we want to see of taking out these highs here. So it's nothing super exciting, nothing to do yet, but if we take that out and then can get things momentum kicking in, it could be exciting here because this could be the first push, the second, and then potentially, catching a strong third wave. So we're watching. It's in watch mode. The other one that we had on watch mode last week that we actually got triggered into, and I did some posting this week, was coffee. Last week we were talking about coffee in a potential short setup that we had been straddling this half
Hmm.
square at 380 all, for almost 2 weeks, if not 2 weeks, and that if we could push up to complete the ABCD or get stuck under, it would get a good short setup. Well, we got the ABCD. I posted that.
Hmm.
Then Barry and I were talking. I dropped down to the 60 minute and basically got a reversal on a 60 minute. Was able to enter some options here.
Hmm.
Got enough of a move down to cover the options, and now I'm sitting in some free runners to see if we do actually go down. I think minimally we could be doing this.
Yep. Yep.
Doing like just a nice simple ABCD down to around 344. Or if we're lucky, we could be catching, here's your first, here's your second lower high, and then we get a big third.
Right.
So we'll see. It's a trade where you got to really manage the risk because this thing flies around. But the setup was there this week. We posted it in real time, and now we're gonna see how it plays out. Let's take a look at the weekly. The key thing here is we got a weekly close below that full square. It's really, look at all these bars and then where the closes were. They kind of almost all were closing down here below this. So if I saw a weekly close over that, I wouldn't be, as gung ho for the short. But for now, we sort of pushed it to the max, and now we see what next week brings here. And then the monthly, you can see the monthly. There's a similar level there, right in the same area around 403. So with a couple of weeks left in the month, we'll see how that closes. But right now, like I said, it's a free runner. Let's see if we get the bigger move, and it's kind of what you want to do, right? Is you want to get in, get your risk out, and then see if probabilities support, the analysis that you put, because that's the way you have those asymmetrical trades, right? Where you got no downside and potential upside in them. Anyway, it has been a long week. I don't know about you all, but I'm tired this week. After the end of the week, there was a lot of action, and I'm
Hmm.
expecting much more of the same, and I think we've talked about that, and it's we think for the remainder of the year it is going to be very volatile. I mean, you were saying today, Barry, that overnight the VIX reached what, 29?
Yeah, almost 29. Yep.
I know, which it's
28.
hard to believe everyone's so calm and the VIX was so high, but that
Yeah,
it's
exactly.
it's I think we all get used to it. So
Hmm.
um as our advice is always do your work over the weekend, have the levels, we've laid out the levels for you. Have
Follow
your
us on
levels.
X.
Yep, follow us on X, watch the videos and know the levels and we'll talk to you all next week.
All right. Great job, Ben. And we'll see you next week.
Take
Bye.
care, everybody.
Bye.
Bye-bye.